I'm sorry friends, there was an interruption of the power supply. I just hope that you are still there. And all right. So I was saying that leverage of 1:25 is more than sufficient. And in United States of America, they do not allow the most of the brokers do not allow the leverage more than 1:50. Now that has some meaning. Why? Because if you do not allow they don't want their traders to lose money in the forex trade. Okay, those brokers are, I will say, ethically, morally correct, because they don't want their traders to lose money. They are brokers. Their option is to earn commissions from the broking. But the problem comes when you want your traders to lose money, because you are taking the other part of the trade, because you know that over the period of time they will lose, and if you give them a lot of leverage, they will be stopped out and all the money goes to your account. And this is how things work with the most of the brokers that are out there. Okay, yeah, got disconnected. That's a mistake from the Dukas Copy webinars team side, I will say, because I have asked them to put it in a fashion that even if I stop streaming, the webinar should continue, and I got a power supply interruption, and so it all stopped. So I had to get it done again. I'm sorry about that. So what I was saying is that leverage is like a two-way sword, and you cannot use it, you should not use it just because they have provided with you with the leverage. So 1:25, it should be at your discretion that you should not use more leverage. But there are certain accounts where you cannot decide how much leverage you should use, you want to use. So in the Dukas copy, the provision is there that you can decide how much leverage. That's cool. No, what it happens in straight to you. Okay. So in Dukas copy bank, in their trading platform, you can decide how much leverage do you want. They give you anything from 1:1 to 1:200. So you can decide from 1:1 to 1:200. That's your choice. But on some certain platforms, there is no choice at all. They give you 1:200 fix, 1:400 fix, 1:1000 fix, 1:100 fix, 1:50 fix. Wanda gives 1:50. So this is a fixed thing. Okay, they don't give you choice, but they give you choice at the time of opening the account. Okay, not after that. But here in Dukas copy, you have this choice every time you want. So maybe you will get this. Okay, here if I open some of the things, I think you will get the option, but I cannot show it to you. So the thing is that you should not use more leverage. Now if your broker does not allow you to choose the leverage of 1:25 or less than that, then how can you do it? This is simple. How can you do it? You just adjust your position size in such a manner, like I told you yesterday. You should adjust your position size in such a manner that if you lose, you should not lose more than 1% of your entire capital. Now here in this case, our entire capital is $10,000. Okay, and we took a standard lot. I will go back to that level. We had a deposit of $10,000. We took a standard lot. Okay, it went 100 pips in my favor, then 50 pips against me. My profits were lost. When it came 100 pips back to the my break even level, at that time I was in $1,000 loss. So the point here is that if this guy, whoever he is, has utilized that thing which we have explained yesterday, that he should have opened the position of the choice that I am going to explain you now. He had a potential of 100 pips to gain. Okay, so that means he had a stop loss which was less than 30, right? Because if you follow the rules, the book says that you should not open a position if you think that the potential profits that you are going to make on this trade are less than 3 times the risk that you're going to take. Now, if you are making 100 pips, then your potential stop loss was 30 pips or so, okay, or less than that. So the point here is that even if you lose, say this 100 points you have lost, or say your stop loss has been triggered now. If you have lost 100 pips on a position of standard lot, you have lost $1,000, right? Take it now in this sense. That means your stop loss was 100 pips, your potential profit was 300 pips, but that did not reach and your stop loss got triggered and your stop loss was 100 points away. So this 100 point stop loss cost you $1,000. Okay, I will not explain it here, I will explain it here. This 100 pips cost you $1,000. All right, so because this 100 pips cost you $1,000 and our account size was $10,000, so how much you have already lost in one trade? How much you have already lost in one trade? You have already lost 10% of your account balance, isn't it? Am I right here? You have already lost 10% of your account balance. You lose 10 trades like this and you are zero. Of course, this is not going to happen in the near future. But the thing is that this is a possibility and there is always a possibility. And even if you lose only 5 trades in a row and you lose only say 50% of your capital and you are left with say $5,000 now, think about it. Now you are left with $5,000 in your account. How much you have to earn to go back to 10,000? See, you have lost 50%. You have lost 50%, but you need 100% to reach break even. Understand? You have lost 50%, but you need 100% to reach break even, because on 5,000 if you make another 5,000 then you will reach the break even, that is 100% of 5,000. But to reach 5,000 from the 10,000 you only had to lose 50%. Now if I only talk in terms of percent, now you remember, you think about it, why I always talk in terms of percentage. When I say you risk not more than 1% of your trading capital to gain at least 3 times the risk that you are going to take. If your risk is 1%, you should earn 3% of your trading account if you are right, and if you are wrong then you should lose only 1% of your trading capital. That means here what you could have done, now see, say here the leverage is 1:100, or say leverage is 1:500, because now I will show you how the leverage will not affect you if you just follow the principle that I have told you. Now if say the leverage is 1:500, that means for one standard lot, how much will you need? One standard lot, only $200, right? Only $200 margin will be required to open a standard lot. But we are not going to open the standard lot as the position. How we are going to adjust our position size? Well guys, we are going to adjust our position size in such a manner that even if my stop loss is 100 points away, I should not lose more than $100. Why $100? Because my account size is 10,000, right? And 1% of 10,000 is 100. All right. So I'm going to take you again somewhere. Wait a minute. I told you about this tool which was there in the baby pips, and that said it's a position size calculator, right? So you have to adjust your position in such a manner No, no 100. Okay, you have to adjust your position size in such a manner. Now I am opening it again. Okay, you see here, what is your account balance? 10,000, right? What is your risk percent? 1%, always, not more. Now your stop loss here is 100 pips. You remember we have taken an example of 100 pips already. So we are giving a stop loss of 100 pips, and currency pair we are talking is USD JPY, and current USD JPY is 144, say 0.50. Okay, so when I calculate, it says you should not open a position which is more than 14,450. Okay, so how much is the standard lot? 0.144 of standard lot. You should not open a position more than this. If you want to round off this, you can say 0.15, not more than this. Make sense to you guys? So if you open a position 0.15, then what will happen? If you open a position which is 0.15, what will happen, guys? Okay, I am explaining it to you now here. See, 0.5 means 0.15 means every pip movement will give you $1.5. Okay, 0.15 lot. If one lot means every pip will give you $10, then 0.15 means $1.5, right or wrong? No, there is something wrong. I think did I do something wrong? 1445, 0.15. All right, standard lot, 1 pip is $10, so $1.5. 100 pips is going to be USD 10,000. 1% risk is equal to $100, so 0.1445. Well, I don't know what is happening here. 0.15 into number of points, of course. So 0.15 into 100, how much it is? It is, I think, 150, right? Then how is it coming 150? It should come 100 as the result. There is something wrong. Don't you think so, Aju? The answer should come as 100. Why it is coming as 150? I don't know. It should come as 100 because 1% is the risk that we have taken. Maybe it, okay, because the price of US dollar against Japanese yen is 150 now. If it was 100, it would definitely be okay. Exactly. Now the price of US dollar has increased as per the Japanese yen, so you will need less. Okay, so yes, pip value of US dollar USD JPY will increase. So I will explain you again by showing you this screen here. See, I have set the current USD JPY price as 100.00. So now it is giving me 0.1 standard lot, and when I convert it to 200, it will be less. Okay, so it will be more double. So since it is 150.0 now exactly, so it will be 0.15. Okay, so since it is 144.0, so this is now this one. All right, but you have to understand one thing here is that it will not be more than 150. I don't know why the YouTube cut, but I know, Clara, the YouTube cut because there was a power interruption at my place. I'm sorry about that. No, it's not server. It's power interruption at my place. And then they have a setting which says that it should stop streaming as soon as the data stop flowing from my side. All right, so I hope you got the idea about. If you have not got the idea, Clara, it doesn't matter really, because you can rewind this. It will be available tomorrow also. this part, because the previous part you have got it, and this part you can repeat and check what we have talked about till now. So going forward here, I'll take another 5 minutes, then we will maybe talk about it later tomorrow. So what I was saying here is that 0.15 means every pip movement will give you $1.5, and some 100 pips will take away $150 from you. It is still 1.5% of your $10,000, whereas the $1,000 was 10%. So even if you lose 1.5%, there is a potential of making more than $450 on that trade, because if your risk is 100 pips and you are going to make 300 pips, then what is it? Okay, then it means 300 multiplied by 1.5, all right, which is equal to 450. So there is a potential of making $450 on that trade where your risk is $150. I hope you understand this part. Yeah, Aju? Yeah, I'm trying to defend you, sir. Oh, yes, sir. Yes. I understand that. Okay, it was a server issue. But I think I will speak with the moderators to keep my stream in such a manner that even if I have a power loss, the stream should not stop, so that whenever I reconnect, because I generally get back in less than 1 minute. Okay, so I should start off immediately. So yes, if your risk was $150 and your reward was $450, that means you still are good, because there is a possibility of gaining 3 times the risk that you are going to take. So this is how you should trade. Okay, now if you trade like this and you mix it with our trading style like we are doing here in USD JPY, we have not been trading for a month in USD JPY. USD JPY is going up and up and up and up and up. I am showing you now one example. It is going up and up and up, and we have a feeling that USD JPY will drop from here very badly to the downside, but we are not going to sell it until 130.39 is broken. That was the actually previous thing, and now we have an upswing pivot somewhere here. I think 139.38 is the level, if I'm not sure, but okay, if we say 130.39, that means what we are looking for here. I'm just giving you an example of the previous one now, but this time, okay, no, we will analyze this and then we will take a decision on this one. Okay, 4 hourly, it was moving high, low here. Okay, so now this is the low that we have to see, and I will make it an upswing pivot here. This is no more upswing pivot now. This is our upswing pivot. Okay, and I am going to increase the weight here. So this is our upswing pivot. Now if you say something like this happens, why I always say that sell at the retracement, you have to understand this in context with in respect of what we have talked yesterday until now. Okay, I say let the price run over this support, let this support turn into a resistance, let us retest this level as the fresh resistance, let on 4 hour or maybe 1 day, let us get a bearish pin bar or maybe bearish engulfing here. Let that day end, let that bearish day end and close the candle, so that we have a confirmation. What type of confirmation do we need? We need a confirmation like this, a bearish pin bar at the resistance or a bearish engulfing at the resistance. This is what we need, but at the resistance, and the resistance will be we know that most of the time the support which is broken acts as a resistance. So if there is a resistance here, we will see a bearish pin bar or bearish engulfing, and at that time, if this is not there, okay, if it is not there, so what is the possibility? You will get that resistance somewhere here in that ellipse, somewhere maybe even down below. And if you say happen to open a position at 139.50, you will have a stop loss above this horizontal line somewhere here. So the points that you will get as a stop loss is almost 100 points here. what will be your potential profit target? Your potential profit target is going to be 135.49 area. So that will be approximately 400 points. See, your stop loss is going to be 100 points. Your take profit, potential take profit is 400 points. So till now, I'm not in a trade. Okay, guys, till now, I'm not in a trade. I'm just analyzing what is the possibility here. Because I know that now recent upswing pivot has been broken. Now this upswing pivot, which was a very good support in the past, may act as a good resistance. So I expect something bearish to form here, and as and when that is formed, candle is closed on the 4-hour with a bearish signal, I will open a stop sell trade below the low of that candle with a stop loss higher than the high of that candle, or maybe even higher than this support, which has now turned into resistance. And in that case, it will be approximately like this: 93, 94, 95, maybe 100 points. And I know where is the next support. Next support is 135.49, and that has 0.402 points away. So I know that now potential is 400 points. The risk is 100 points. I have a risk to reward, a reward to risk ratio of 4. So that is a very good reward to risk ratio for me to open this trade. One thing, see, I am in the direction of the trend now, which is just the new made trend. Then second, I am very close to the resistance and I am a seller. You have heard about it. Sell close to the resistance, buy close to the support. So we are going as per the requirements. Now, before entering a trade, I know there is a potential of gaining more than 3 times that I am going to risk. So if something like this I do, say 10 times, I need to be right only 3 times out of these, because I know if I am right 3 times, I will make 9% of my account, and rest 7% I will lose maybe if I am right only 3 times. But believe me, most of the times you will be right in this case, maybe even 9 out of 10, maybe 8 out of 10, maybe 7 out of 10. Okay, this is the probability of trading like this. Now, only one thing that you have to do here is you have to adjust your position in such a manner. Now, in our example, what we have? In our example, we have a leverage of 1:500, and 100 pips is what our stop loss is. My question is that what will be your position size if you have an account size of, say, $500, no, $5,000. My question to you guys, only to know that you have understood the concept, I will say you have $5,000 is your account size. Okay, now this is the trade that you want to make here. You want to sell here at 139.50. okay, you want to sell at 139.50. your stop loss is 140.50. I'm writing it in your this thing sheet so that you can calculate it. Your sell order at 139.50, stop loss at 140.50, take profit at 130. Oh, how much it is? Let me check. Your take profit is 135.50. okay, so this is the question, my friends. This is the question, or this is an exercise for you. You have a balance $5,000. You have to open a sell position at 139.50. Stop loss is at 140.50, and take profit is at 135.50. So this is a sell order that you have to place. The question is that how much should be your position size in USD JPY? Anwar Osman is saying 5,000. What is this 5,000? Is this the position size that you're talking about? All right, guys, it's not that difficult. Okay, I'm going to give you the answer because we are lacking time here. You see, we have an account balance of 5,000. We are risking not more than 1%. Okay, risk percent is 1%, and we have a stop loss which is equal to 100 pips. USD JPY is right now, we are trading, and current ask for price for USD JPY is 144.14. Okay, so we calculate and it gives you 7200 as the position size. Now that means 0.07 standard lot or 0.72 mini lots. So this is how you have to trade. 0.7 is the thing that you can trade. 0.7, guys, nothing more than that. All right, what's the ask price? You have lost the audio. What's the ask price? Ask price is just 1 pip away, 1 pip above this bid price. Okay, ask price is the bid price plus spread. Spread is less than 1 pip in the USD. Got the result. What is it? I think it should be 0.07 or 7200 units, right? Because you cannot afford to lose. Yes, 0.7, not 0.7 but 0.07. 0.07 Anwar. Standard lot is 0.07, 0.7 mini lots, or I will say if I have to talk about the units, then it should be 7,200 units. That's it. So you should not open more than this position if you have $5,000 in your account. But you ask yourself a question: is this the case with you? Because I'm sure that you are opening more positions. Sometimes we can add few spreads when the market is closed for the day. Use close. Add few spreads. What does it mean, Aju? Sometimes we can add few spreads. I did not understand the question. I'm sorry about that. 0.7 is the answer, not 0.7. 0.07 is the answer. 0.7 if it is mini, 7.2 if it is micro, and 7,207 to be exact if I take the USD JPY current price is 144.14. This has never have been the case so far. What do you mean? This has never been the case so far. Few pips, I mean. Sometimes we can add few, okay, pips when the market is closed for the day. Yeah, maybe. So you see, you can counter for your spread, okay, by adding a few pips up or down to your targets and stop loss. And yeah, but the problem, where is the problem? The problem here is, if you adjust your position size like this, then you have not to worry about leverage, because to open a position of 0.07, to open a position of 0.07, how much is the margin that you need? All right, how much money do you need from your account? Now this is the question. If you have a leverage of say 1:500, or say, okay, 1:100, we will count 1:100. For 7,200 units, you need a leverage. You don't need a leverage. You need only $72. $72 in your account. You're with me? $72 to open a position size of 7,207. Yes, got it? You only need $72, and you need, it is 1:100, right? So if you have All right, so if you have $5,000 in your account and you are using $72 to open a trade, how much is the margin getting used from your account? It is only 1.5%, right? So this is so less of a percent which is being used as a margin. Earlier, when you were using $1,000, you were using 10% of your account. Now you are using only 1% of your account. And even if the trade goes 150 pips against you, you will only lose $50. That is less than 1% of your trading account. But if you gain, if you are right, you will make $450, and that will amount to be 3% of your account size. If you keep on doing like this for a year, you will end your year in a very good percentage profit. Think about it. All right, and this is how you become consistently profitable trader in the long run. This is how you become the casino. This is how you keep the edge. That is, you always win because at the end you have asked for more. You are filling the puzzle for us. Thank you. Oh, thank you for being with me. Thank you for listening to me so patiently. Thank you for coming again after the interruption. I'm so thankful, and I kind of feel like connected with you guys. I had initially my webinars of only 30 minutes, then I changed it to 1 hour. Now we are doing it more than 1 hour, and I feel like going it for more and more and more time. Casino, yes, casino, yes, that is what I want you to become, casinos, because you don't have to think about what you lost in a day or two or maybe in an hour. You have to think what you have gained in a month, in a year. This is how it works. You may get lost in a single trade or two, but you have to be profitable at the end of the month, at the end of the week. There should not be a single week or month where you are losing. Okay. All right, guys, thank you very much for staying with me here. Tomorrow we are going to see you again at 16:30 GMT, and we will try to discuss and take it a bit further from here, and we'll also try to discuss our charts, which we are not discussing from the last 2 days. But tomorrow I think we will try to discuss some charts also. And in the end, I just want to say you that please do not, never ever risk more than 1% of your capital on any single trade, and look for a potential profit of 3 times the risk that you're going to take. Thank you very much for being here. See you tomorrow. Bye bye, and make this winning stream a habit. Yes, thank you. See you tomorrow. Yeah, okay, bye guys, see you tomorrow.